When it comes to individual stocks like Nvidia, you can see that stock price soar. However, during times of transition in the market, it is really important to know that not only the diversification, but also knowing that interest rates could be going up or down, we could be looking at a recession. Now, this is the reason why I stick and I really plug for exchange traded funds, or ETF. And in today's video, we're going to be looking at 3 ETFs that are screaming the buy signal in August. So let's go ahead and break these down. The first one we're looking at this list is the iShares Russell 2000 ETF. Now, small stocks and small caps are starting to gain a lot of ground. One of the key reasons is when the Federal Reserve decides to lower interest rates, smaller companies do tend to be more profitable and has a greater benefit from those cuts. Now, the reason for this is with the lower interest rates, it's cheaper to borrow money. A lot of larger companies sit on a ton of capital, sit on a ton of cash, or they have the ability to raise a lot of money very fast. For small caps and smaller companies, it's a lot more difficult, and they're really relying on a lot of financial institutions when it comes to borrowing. Now, when it comes to picking individual stocks, I do not do it at all. We've said this before. That is the reason why I stick to ETFs, and this Russell 2000 ETF is perfect. It holds 1,986 small cap stocks, which means you are doing and really investing in the smaller companies that we have within the United States. And unlike the large cap VOO or the S&P 500, it doesn't have a mega high evaluation because, of course, we don't have the huge tech companies that we see in the S&P 500. Even the average price to earnings ratio of the stock portfolio is around 16.2, which is relatively low in comparison to some of the companies where we see the 40s, 50s, 60s, even higher than that in the price and to earnings ratio. Now, of course, when you look at expense ratios, 0.19, incredibly low expense ratio to get into this iShares Russell 2000 ETF. And of course, some of them can be a little bit lower, but it's still pretty reasonable. Second one we look at is the Vanguard Long-Term Bond ETF. Now, of course, this is a Charles Schwab recommendation that they should buy and carry long-term bonds ahead of the interest rates cutting. That way you can actually lock in some of those bond rates at a much higher rate before they go down. Now, historically, bonds have kind of underperformed. So looking at a few of those, the BLV, which is the Vanguard Long-Term Bond ETF, but even thinking of the BND, a couple of these really do not really carry the same weight that we see. And it's kind of crazy to think because this ETF specifically holds 3,100 bonds with a yield to maturity of around 5.2%. Which is what currently we're seeing, which we know the interest rates are going to be changing. But looking at the 5.2%, I am getting 5% right now on a high yield savings accounts. We have CDs out there that are 5.4. So not only holding it kind of a longer term, or most of the interest rates we're seeing right now are shorter term, or there is literally no lockup period at all. The bonds tend to grow very, very slowly. That is the really big thing that you have to pay attention to. When we start looking at about the last 10-year return of the bonds are yielding probably about 2 to 3% on average is what I've seen across different ETFs. And of course, the expense ratio on this one is a 0.04, which is pretty good because very similar funds are a 0.83, significantly higher when it comes to the bonds. And of course, when you start thinking of bonds, if the expense ratio is higher, you are literally eating up all of the value that you have in those bonds because they don't grow exceptionally well. And the final one we're going to look at is the Vanguard Small Cap Value ETF. Again, we have one small cap already on the list. Why add another one? Because the Vanguard Small Cap, the VBR, historically has been one of the best performing assets over the long run. So when you start thinking of the small cap, this actually tracks the CRSP, the CRSP, US Small Cap Value Index, and value. And really looking at this, when you think of investing, when you think of Warren Buffett, when you think of small caps themselves, it focuses on small caps with a very attractive valuation. This is important to note. When it comes to Warren Buffett, he always talks about finding value in companies, and that's exactly what this does. It's not just buying everything like we see with an index like the Russell 2000. This is only using a set parameter really to go in there and buy. This ETF owns 840 stocks, which when you look at the Russell 2000, that was, just south of that 2000 stocks. It is really the US, the average price to earning ratio is 14.1, lower valuation multiplied. And really in the eyes of many investors, it's good to carry and have some of the small caps, because of course, like we said, when rates start going down, small caps usually improve and do pretty well. Now, the small cap ETF isn't quite as effective when it comes to the cost ratio. Annual expense is 0.07. But when you start thinking of mutual funds, when you start thinking of a lot of other things, it's so cheap with these Vanguard funds. That is the reason why I do really focus on the ETFs, and investing in these small cap ETFs do make a big difference. But the one thing that I notice, and I do want you to really do your own research, do your due diligence, make sure that you know exactly what you're investing in, because what I do, historical performance, I know is not indicative and really guaranteed when it comes to future performance. But when you start thinking of the large cap, and I do hold mid caps, I do hold small caps, those are all part of my 401k portfolio. So when it comes to large caps, I do in this portfolio specifically with the 401k, I have 60% that are in my large caps. So you're talking about your S&P 500 companies, the Apple, the Nvidia, the Google, all of those big tech companies that do fall in that S&P 500. When it comes to the mid caps and the small caps, I hold 20% in mid, I hold 20% in small. So regardless of really the way that it goes and the way the market is pulling, I'm gonna have some investment in those mid and those small cap companies, because there is times historically when they do outperform the large caps, which right now we are not seeing. That is due to not only the chips, the processors, but also the very push that we see in large caps with the artificial intelligence that is coming. So guys, that's gonna do it for today's video. Let me know what you think about those small cap value ETFs and the small caps in general, as well as the bonds. Again, personal preference for me, I don't invest in any bonds. I don't see the value. I don't see the returns there. But when it comes to small caps, those mid and large, I do have money invested in my personal portfolios for all three of those. So again, that's going to do it for today's video. Let me know in the comments what you guys think. And as always, thank you guys for watching.